Hello guys, welcome back to another Lumley trading video. In this one, it's going to be day 2 of the trading challenge, but actually the first day we've taken a trade. So you can see over the top right, we have finished the day up $208. So not a bad first trading day. Now we took 3 trades today, 2 winners, 1 loser. So we'll go through each of these trades, and actually what was quite interesting is we did actually post these. Again, if you follow Lumley Trading on LinkedIn, you could have found it there. If you're already subscribed to the newsletter, you could have found it there. And if you're not already subscribed to the newsletter, it's in the description. But we'll send this out whenever there's big news coming out. This will always be sent out. Refresh it. You can see it's sent out about 3 hours ago, so it gave you time for each of these trades. It was released before any of these trades actually happened. And we'll go through these and kind of go through the thought process and go through the trades we actually did trade. So, firstly, what was the first trade we took on the day? So we can see we had US ADP non-farms employment change coming out at 8:15 a.m. So again, that's just a Forex Factory screenshot if you just wanted to see the screenshot from there. Now, what did you say? Personal trade plan. Not fast on the range. All we're looking to do is fade the move using the yen. Why did we look to use the yen? Mainly because it's one of the most liquid currencies, or is usually the most liquid currency. And it just provided through backtesting. I mean, the only way you can find these trades really is just by doing backtesting, watching them live and all of that, and seeing how do they perform. And I saw if you traded it on the indices, or the bonds weren't volatile enough to really make it worthwhile. And trading on the indices, sometimes it was a fade, sometimes it was a direction, and obviously then that just made it hard to trade. Trading the currencies, near enough every time it provided a fade opportunity. So again, we're going for the safe trades, especially when we're going for the funding, because we don't have, it's not like our personal account where, you know, we have the account to basically draw down. We have fixed drawdown. We're capped at 2k max loss, 1.1k overall loss, daily loss. So I need to be definitely disciplined in those. So I don't want fake outs, because again, they can easily make you kind of fail the challenge. So yes, yen, what tends to move 20 ticks on the release. And again, could have traded it on the euro if you prefer, but the yen's always more volatile. So we'll quickly go over, and what we can actually do is I can even pull it up on here just so you can see where we got our entry. So going over to the yen, can make this chart bigger. You can see how did we trade this. We changed this. Oh, so you can actually see here. So we traded this. How did we trade it? Got long at 72.165, and again, where did we sell into? Actually, I think that's all. Okay, yeah, so sorry. We'll go through the log so you can see. So again, this was a fade. We got the spike up. We faded the move, so we got our first sell there, second sell there. Actually, I think we got our first sell there, second one there when we were correct. We looked in one here, so that's why that buy's there. So we looked in one contract here. The reason we didn't wait for the whole fill was, again, it was the first trade we took on this account. So yes, we should always follow the rules, but I kind of just wanted to lock some money in. We were already up about $100 on the trade. Kind of just wanted to realize it, just to kind of have a bit of a buffer. If it ended up going against me, it wouldn't have mattered. We could have got out the trade break even, worst case. So it's more of just a psychological thing. I mean, that's a big part of trading. Definitely a big thing to be noting when you're trading. But psychologically, that is one of the biggest drawbacks as a trader. So it's how can you manage it and how can you make yourself feel more comfortable. I know if I had some money locked in the bank, I had a bit of a buffer, it would make me feel more confident going into more trades. But also, if the first trade I take on the challenge is green, again, it's just going to boost your confidence. It's just going to make the trading process a lot easier from there. That's why I looked in one more, and then we got this reversal candle on the 1 minute, so I just looked in that final one, because again, it's still relatively new to this challenge. We were near enough, did the whole fade, but that reversal candle, wasn't sure if we would kind of just push higher, because again, there was quite a lot of news coming out today, so maybe something else comes out and pushes it out. We can see, obviously, if we did hold, we would have had to go basically back to break even, and then it finally filled that gap, or kind of what we were looking for. So that was the first trade breakdown on the yen, and what we can do is executions. I can quickly show you this and where we took the trades. So again, these 4 here, we took a sell, and you can kind of see the time here that we took them. Took them literally on the news release, 5 seconds in, 15 seconds in, or sorry, 11 seconds in, and we looked out the first 38 seconds in. So that trade from the first sell to the first buy was only about 32 seconds, and we made $100 on that. And that's really the power of trading this news and knowing how to trade them, because again, they can be really profitable. And then we closed out the other one about 4 minutes later. Just again, direction wasn't being as clear, wasn't as clean as I would like, so kind of just took it out. But again, still in good profit. Now, onto the next trade. You can see this was traded over on the ES. What was this trade? So again, going back to the newsletter we posted, what were we looking for? Onto the next release. Jolts job openings, 10 a.m. release. Personal trade plan, build range of 0.3 each side. And so obviously we were forecasted, I think it was actually 10.27, but again, we just round that up to 10.3 million. So our range, 10 million to 10.6 million. So all this means is if it's within, because we're saying if it's within the range, we're looking to fade the ES. If it was outside, we look to play direction. And what we can see, if we go over here, what was the result? ADP non-farms, that's not what we're looking at. Jolts job openings came out at 10.3. So within range, it was between the 10 and 10.6 million. So what are we looking to do? Fade the ES. So again, if we go over to the trade, and what we can actually do is I can put it in here. It's probably actually easier to show you on Ninja Trader, just because you can then kind of see where we got in, where we got out. So again, we got that spike candle down, moved a bit lower on that second one. Why did I not enter here? Because again, it was still showing that weakness. This candle here did show a bit of buying pressure. I didn't want to buy at that high, because then I was like, okay, there's not much risk to reward now. So instead, I kind of waited for that pullback. If it pulled back further, I would have got in. If it didn't, I would have just skipped the trade. But it pulled back, so got in 10.53. Again, the fills actually on this one weren't great. We did actually click it. It was around like that 53 is when we clicked it. But again, went off by 3 ticks. Not ideal, because that is $75. No, sorry, what's that? $12.50, $25, $37.50, just kind of lost on that spread, but there's nothing you can do about that. We then spiked up and I closed it out instantly. Why did I close it out? Again, it's still the same thing. It's still the first day of the challenge, and it was starting to look a bit ugly. It was starting to show a bit of weakness, so I closed out kind of just as more of a scalp. But again, it followed the plan exactly. Fade. Where did it push to? It literally faded. I don't know how to place actually, because I don't use this for charting. Again, obviously we use Think or Swim. I don't actually know how to put the drawing on, but either way, actually it's probably up here. Drawings, there we go. Because where did we get out? I mean, or where did it fade? And what is the fade? Again, it's just trading back to entry. News came out, spiked down, fade, went back, and then continued trend. So again, that trade plan worked out again really well. Exactly what we looked for. And that one, I think we made another 100. So we were actually up to about, I think we were up around 315 on the day. And now you can see we're not as high up, we're only up 208. So why is this? And this was onto the final trade, which again, this is going to be showing you why psychology is really important, because this one really got the best of me. So this was the crude oil. We sold at 880 or 879 and closed at 990. Obviously that was a short, so we lost money on it. Now, why did we lose money on it? Should we have? And was it to the trade plan? So again, what we can do is just switch this over to now crude oil, and we can see how we traded this again. So I'll quickly put up the trade plan first, because again, this is what I'm thinking before we take the trade. Crude oil inventories 10:30 Eastern. Again, not fussed on the range. All we're looking to do is fade, and obviously as it's a crude oil release, we're only really looking to trade it on the crude oil futures. Now, provides a fade of at least 13 ticks, and 25 ticks usually on the higher side. Now, if we go over to my observations, so again, this is me just tracking the crude oil fades over the weeks. We can see 29, 15, this is just how many ticks the fade really provided. And we can see last week, for the first time in really all our testing that we've done, it near enough doubled the fade. It did 53 ticks. Now today it did the same thing, 56 ticks. So it's just showing us the crude oil is really getting really volatile these last 2 weeks. So again, that's a key thing to note. We'll go over that. But we put this in start again. Because it's a fade, you don't really have a set stop, because again, it's like direction, you know if you're kind of wrong. On the fade, it's where you placing your stop. And from back testing I could see on crude oil, it never broke or it kind of never continued direction for 2 minutes. So me knowing that, I was thinking, and that's why I noted it here, have a stop if the third candle pushes further against the fade. So what does that mean? So we'll put this back quickly over here, and we'll go over that in a second. We'll actually make that a bit smaller just so it's back to where it should be. But over on CL, what does this mean? So the news was released here. Spiked up for 1 minute. Again, it pushed a tiny bit higher in that second minute. I said if that third candle or the third minute pushes any higher, that's where our stop should be. Again, it's never happened, but better to be prepared than underprepared. So as I've never seen that, if it breaks it, that's something that we've not seen happen before. So if it broke that, I should be concerned. I will be wrong. I should get out of the position. So again, that's basically what was said here. So again, if we go down, that's basically what this means. Prepared, not failed any releases this year, but be prepared. Always be prepared. Have a stop if the third candle pushes further against. The reason again is it's never happened before this year. So if we see it, we get out and then we can start observing what happens. We don't want to be risking. We don't want to be gambling. We're not gamblers, we're traders. So as soon as that happened, it would have been a gamble because we've not seen it before. That's really what I was focused on. And again, then what did it do? It did the fade, and this fade really provided a lot of opportunity. I mean, if you're in one contract, you'll see we went over my fills. I got in my first, or my fill at 80.79. So again, literally half the move. But if I was to hold that, that was a $300 winner because it's $10 a tick. So again, that is the power of kind of being prepared. If we followed the strategy to the point, we would have made $300 on there. Now, what actually happened? So again, we can pull it up here. You can kind of see we got in, we got the short, 80.79. And again, we closed it on this fourth candle. Again, if we held it literally a minute longer, we would have been in the money. But why didn't I? And really, it was down to a psychological issue. It was freaking me out. Still the first day of the challenge, I didn't want to give up all the losers. And obviously, what do we know with the crude oil? It's $10 a tick. We got in at 79. How far did that go against me? So if we go 79, what was the high? 81. It went against me 31 ticks. What does that mean? That means I was down $310 on that one contract in the space of really a minute. So that put me to break even on the day. So obviously I didn't cut out instantly. I still knew where I wanted my stock to be, but it did freak me out. I mean, I could have just lost all my day trading gains instantly. So as soon as I started to see it pull back, I really kind of just wanted to get out, more just as a psychological reason. Again, I didn't feel comfortable anymore in it. Yes, in hindsight, and if there was no emotions attached to the trading, again, this is why sometimes algorithmic trading can be better, is there was no emotion if you trade it algorithmically, or if you trade it with really fake money. So you would have been a lot easier to take this trade as planned. And if you were trading the play, or maybe you were doing smaller size where it didn't really affect you as much, obviously, if you've got a 100k account, one contract's really nothing. And I mean, even on a personal account, I would feel comfortable trading that. But I've got tighter stops as I'm trading now trying to do it for funding a challenge. So again, that's part of the kind of downside, is it affects your psychology. And I mean, all you can really do is make yourself feel comfortable. I mean, we don't want to be really discomfort the whole time. So again, I got uncomfortable. Again, I wasn't stupid with it still though. I know, okay, I'm not going to sell it at the high. As soon as I saw I hit break even in the day, I'm not just going to sell it, because again, that would have been quite stupid. If I saw it break through for that third minute, then obviously get out, I would have had a small loss on the day, but there's no point getting out break even when I could have just had a small loss on the day. Or like we did now, we closed up $200. So it was being a bit more smart. We see it pull back, and again, we were kind of just struggling. We kind of pulled back but keep struggling to break it, and that's why I ended up cutting out around here, because I was just like, okay, I want to be out, I want to be safe. Then ended up obviously breaking down, and we could have made that $300 if we just stayed in it. But again, we give you the trade plan. That's what the plan is to do, and that's why we post these out. So that is the trade plan. In this case, again, these two worked out. Traded them as planned. They worked out perfectly. This one, again, would have worked perfectly if we just followed the plan. We didn't in this case. We took a small loss. And again, it kind of hopefully kind of makes your psychology that bit stronger. But also, it makes me just, again, even more kind of focus on following the rules. If I followed the rules, not only would I not have lost $100 on the trade, but we would have been up $600 today. And that's the difference. At one trade, not following the rule on 1 out of the 3 trades, how did that affect me? It made my end of day P&L from 208. Oh well, to 208, but it could have been over $600 if we just followed the rules. So again, wanted to go through this. These videos again are going to be quite long, so thank you if you're still watching it now. Let me know in the comments if you are. But it's really kind of, I'm trying to make these kind of so I can come back and watch them not only, but also if you're maybe a newer trader or you're looking to do funding yourself. Everything really matters. It's not only your strategy. Obviously, strategy is important. You need to have a working strategy to make money in the market, but you can have a working strategy and still lose money. And again, that's if your psychology is wrong, you're taking targets or profits too early, you're moving stops and all of that. So again, I would like to document this. Here, I shouldn't have got stopped out, but I did, so I need to document it. And I also want to document when I'm doing things right. Because again, if I know, oh, cool, the 2 trades that made money, why was that? Because I followed the plan. So that is kind of the overall breakdown of the day. Definitely come back tomorrow because we will be taking trades tomorrow. Why is that? We got big news coming out tomorrow. If we quickly pull up the economic calendar, just to give you a heads up. Again, we'll post out a newsletter tomorrow. And we will also obviously have a recap if that's what you preferred to watch. But tomorrow we have quite a bit of news. We have the PCE price index, focusing more on the month-on-month probably. That is something I will be looking to trade. Not a guaranteed trade, but something I'm looking at. The ISM manufacturing. This, again, most likely will be a trade. But I need to do a bit more testing on that tonight. Again, I like it fresh in my mind before the trading day. Actually, it was the ISM PMI that we're focusing on tomorrow. And then it's actually not on here. But also at 10:30 market time, basically the same trade we had today. Instead of it being on crude oil, we have the natural gas inventory. So again, it's the same trading strategy of just a fade. So I hope you enjoyed the video. If you did, why not drop a like and subscribe. Hope to see you next one, and that's it. Peace.